Is your mortgage mindset outdated? The 30-year myth debunked. Welcome back to Retirement Solutions for All Ages. I'm your host, Ruth, the retirement mortgage expert at Nexa Mortgage. Today we're going to challenge a deeply ingrained belief, a mantra passed down through generations about one of the biggest financial decisions most of us will ever make, your mortgage. We're talking about the ingrained idea that paying off your mortgage, especially a 30-year one, before retirement is the ultimate financial goal. In our last episode, we discussed how financial literacy is more than just math and how our family's money mindsets can shape our beliefs. Today, we'll look deeper into one of those mindsets, the mortgage-free dream. We're going to explore where this mentality came from, why it's often outdated, and what truly financial savvy individuals are doing instead. You spent years working towards retirement. Don't you deserve to enjoy the fruits of the tree that you watered? Let's uncover the reality. The American dream and its roots. For decades, the American dream has been firmly tied to owning your own home, and especially owning it outright with no mortgage. It's a powerful image. The mortgage burning party, that final payment, and feeling absolute freedom. If we were to ask you, what's the purpose of paying off your mortgage? Why is it worth it? I bet the answer is so ingrained in your head that you can say it out loud. It's usually some combination of one of these three reasons. You don't have monthly payments. The bank can't take the house away from you. You can pass it down to your children. And for a long time, these reasons held significant weight. But the reality is, for many, this is an outdated mentality. To understand why, we need to take a quick trip back in time to the Great Depression. Before the 1930s, loan agreements often gave banks the right to demand full repayment of the loan at any time. That sounds unbelievable today, right? Back then, no one worried about it because it was like asking for the moon and the stars. But then the stock market crashed on October 29th, 1929. Millions lost fortunes. Banks running out of cash started calling loans due from good Americans who were faithfully making their mortgage payments. There was no demand to buy homes, so prices plummeted. Ultimately, more than half the nation's banks failed, and millions of homeowners lost their homes, unable to raise the cash needed to pay off their loans. Out of that trauma, the American mantra was born: always own your home outright, never carry a mortgage. The reasoning was simple. If the economy collapsed, at least your home was secure. The bank couldn't take it away. However, what many people don't realize is that laws have been introduced since the Great Depression that make it illegal for the banks to call your loan due randomly. Can you imagine borrowing so much money it would take you 30 years to repay it and then being told a year later, we need all that money back now? That just doesn't happen anymore. The FDIC was created to insure banks. Even with the housing crash of 2008, if you kept making your payments that you promised to make, the bank couldn't take the home away from you. So, while the fear of losing a home was deeply instilled, that particular threat, the bank suddenly demanding full payment, is no longer a risk. The reality of modern home ownership. Let's look at those 3 reasons for paying off your mortgage through a modern lens, starting in reverse order. You can pass it down to your children. The reality is, by the time many of us pass away, our children will hopefully own their own homes and be financially established. While they may inherit the home, inheriting a paid off house isn't always the most strategic legacy, especially if that equity could have been used to generate more wealth for you or your heirs during your lifetime. The bank can't take the home away from you. As we discussed, modern laws protect you from an arbitrary loan recall. If you continue to make your agreed upon payments, the bank won't take your home. However, it's worth noting that if you have a reverse mortgage, you don't have to make monthly payments at all. This highlights a different path to payment freedom. The first thing, you don't have to make a monthly payment. This is often the strongest emotional appeal. The idea of living payment free in retirement feels incredibly secure. But consider this: most homeowners don't live in their home for 30 years, paying it down only to celebrate and live in it for another 30 years payment free. Statistics show that the average homeowner lives in their home for only 7 years. And unlike our grandparents, we no longer keep the same mortgage for 30 years. The Federal National Mortgage Association, Fannie Mae, states the average American mortgage lasts just 4.2 years. People are refinancing to improve their interest rates, restructure debt, remodel, pull out money for investing, education, or other expenses. Given these statistics, it's difficult to understand why so many Americans continue to pay a premium for a 30-year fixed mortgage rate when they are likely to only use the first 4.2 years. We can only conclude that they are operating on outdated knowledge from previous generations when there were few options. Making your mortgage work for you. So, if the traditional mentality is outdated, what do financially successful people do? Wealthy Americans, those with the ability to pay off their mortgage but refuse to do so, understand how to make their mortgage work for them. They go against many traditional beliefs. They put very little money down, they keep their mortgage balance as high as possible, and most importantly, they integrate their mortgage into their overall financial plan to continually increase their wealth. This is how the rich get richer. They know that paying off debt is not the same as accumulating assets. Every dollar you give to the bank is a dollar you didn't invest. While paying off the mortgage saves interest, it denies the opportunity to earn interest with that money. Rick Edelman, a top financial planner, explains that owning a home isn't the ultimate financial planning goal in isolation. How you handle home ownership can determine whether you achieve financial success. Home equity sitting idle in your home has a zero rate of return, unless it's a reverse mortgage with an increasing line of credit. It's not the same as cash in the bank. Only cash in the bank is the same as cash in the bank. Being house rich and cash poor is a dangerous position. By strategically managing your home equity, you can increase liquidity, meaning you have cash available for emergencies or investment opportunities, rather than having it trapped in your residence. This also increases safety as you diversify your assets rather than having all your eggs in one basket. It's time to reevaluate what truly leads to a comfortable and secure retirement. It's not about being debt-free at all costs. It's about optimizing your assets, understanding the flow of money, and making your resources work as hard as possible for you. You've spent years working towards retirement. Don't you deserve to enjoy the fruits of the tree you watered? That often means shifting your focus from paying down a mortgage to strategically managing your home equity as a larger part, integrated financial plan. This approach helps you maintain liquidity, mitigate risk, and generate wealth, allowing you to enjoy your retirement years with a more financial freedom and flexibility. If this episode made you think about your mortgage strategy, or if you simply want to understand how to make your home equity work harder for your retirement, I encourage you to reach out. As your retirement mortgage expert, I can help you explore modern solutions that align with today's financial realities. You can contact me at 828-888-LOAN. That's 828-888-LOAN. Or email me at ruth@nexamortgage.com. Thank you for joining me on Retirement Solutions for All Ages. If you found this episode enlightening, please leave us a review, share it with somebody who might benefit from this new perspective on their mortgage, and hit the subscribe button so you don't miss future insights. Until next time, I'm Ruth, the retirement mortgage expert, reminding you true financial security isn't just about paying off debt. It's about smart, strategic wealth building.